So still keeping 95% in cash?
Now it's about 50% in cash.
Why is that, Mark?
Basically, I think the markets have gone way too high for bargains to be found. I mean, it's all about valuations. If you look at the valuations of most of the companies, they're very high. Expectations are high. Of course, often you get a situation when people are very cautious. That's a time when the market will go up. And it's possible that will happen. But I would say cash is king right now. And when there's a correction, we'll be in buying aggressively.
But we're looking at a dollar that is weakening, and with expectations of 2 cuts this year, the dollar has had it even lower. I'm just wondering why it still makes sense to hold cash at this point.
Well, don't forget, with cash, you can get 4 to 5% interest. So this is very, very nice interest and safe interest in U.S. Treasury. So the benefit of holding cash is very good at this stage of the game. Now, of course, there's some opportunities in the market, and we've taken them. As I said, we're about 50% in cash now, but 50% in stocks. And as you know, emerging markets in particular are beginning to look brighter. In fact, in the last year or so, they've kept pace with the U.S. market, which is good news. And I expect further strength ahead once these tariff negotiations are completed, which will probably be happening in the next 4 or 5 months.
Mark, you talked about deploying some of that cash. Where have they been deployed?
Believe it or not, here in Japan, I'm now in Osaka, Japan. And in Japan, there are great opportunities, companies that are having very good earnings, very low price earnings ratios, good growth. And of course, as you know, the Bank of Japan, the policy rate now is about 0.5%. It's expected to rise, but not by very much. Inflation is about 2.7%. So it's not a big problem here in Japan in terms of rates. So Japan is a good opportunity. The other opportunity, I would say, is in India. As you know, I've been a big bull on India for quite some time, and Taiwan. Those are the 3 areas which I think hold a lot of promise.
And also, these are the 3 markets which have been slapped with pretty high tariffs by the Trump administration. India, 25%, very unexpected. Might that shape how you look at the Indian market and what the opportunities are there?
Well, you know, the great thing about the Indian market is it's a self-contained market. As you know, it's one of the most trade restrictive markets in the world. If you look at not only tariffs, but non-tariff barriers are huge in India. So it's very self-sufficient in many, many ways. So they really don't need a lot of exports or imports. So that's one big benefit of being in India. The tariff situation is not going to hit them very badly, and they will probably hold out for a better deal with the U.S. at the end of the day.
How would you deploy your resources in India? What's looking attractive, bearing in mind that Modi is now calling for his citizens to buy India?
Well, consumer products, consumer companies, of course, will be very good. There are a number of retail listings that look attractive. But look, you could look at any sector. You could look at the airlines. As you know, the airlines in India have been growing at a very fast pace, but more importantly, in the telecoms area. There are great telecoms companies. Bharti Airtel comes to mind. These are companies that are doing very, very well in the Indian market and will continue to do so.
The thing is, Mark, despite the catalyst that you mentioned earlier, the Indian market has struggled the last few months. What would it take for it to have a turnaround?
Well, I think, first of all, you have to look at the Reserve Bank of India. RBI has cut rates from 6 to 5.5, and inflation is now below 4%. So there's a good opportunity for the RBI to cut even further, which would be bullish for the market. That's number one. Number two, these battles with the U.S. on tariffs, of course, is having an impact. a psychological impact, but this will be short-lived in my view. So the opportunities are still there. And if markets in India, some prices have come down, it's probably a good opportunity to buy.
We have seen a flood of primary issues. I'm just wondering whether you think that may weigh on India's secondary markets.
Of course, that situation of a lot of IPOs, a lot of new companies coming on the market draws money, and therefore the other part of the market, the listed part of the market, suffers as a result. So yes, I think this will continue for a while, but it's not going to go on forever. And when that ends, then of course the entire market will benefit. But you must remember, IPOs are good for the market because it gives the investor lots of more choices, which is good overall.
Mark, overall, the market's pretty concerned about the tariffs that we've seen imposed by Trump, and some have seen very hefty tariff levels. I'm just wondering, on balance, how are you assessing the impact of those tariffs on market sentiment?
Of course, the sentiment has been very bad, as you know. Tariffs have scared a lot of people. A lot of people think that tariffs will result in higher inflation. Tariffs will result in poor earnings for some companies that depend on imports and exports. So there's no question that tariffs has been the number one item that drags down the market. And we're looking now at between, 15% to 41% tariffs, but negotiations continue. And another interesting point to remember is that a lot of this is in the courts in the U.S. Federal courts in the U.S. may invalidate a lot of the tariffs that the Trump administration has instituted. So this is another sort of uncertainty that we're looking at down the market. But nevertheless, the taco mentality is now gone away. People are beginning to see that Trump will not back away in many of these areas.
So, Mark, uncertainty remains. It hasn't been cleared, even though now we have the numbers attached to the tariff threats.
Yeah, of course. You have to look at this long term. All of this talk about tariffs, up, down, sideways, what they're going to do from day to day, that's a lot of noise. The ultimate thing that we've got to take home is that things have changed dramatically in the trade environment globally, not only the US. People are looking at this much more realistically. There's going to be a lot of thinking about how to make things fairer for all countries involved. So I think at the end of the day, it will be a better world that'll emerge in the next 6 or 7 months, where trade negotiations will have completed and we'll have a much more fair trade situation globally. Now, of course, the big problem, of course, is China. Is China willing to reform and do away with all the non-tariff barriers? By the way, that is the big issue. The tariff rate is one thing, but the non-tariff barriers in some of these countries could fill a book. These are the things that have to be negotiated. And I believe that if negotiations with the US and China are successful, a lot of the non-tariff barriers will disappear. And that will be great, not only for the US, but for other countries trading with China.
So when it comes to China, Mark, is it fair to say that you should adopt a wait-and-see approach until there's greater clarity in terms of negotiations between the two sides?
Yes, I think it's a good idea to wait, maybe nibble a little bit. There are a few people that are recommending companies in China, but I would say there's no rush. Yes, the China market has done well recently, but I think there's plenty of time to get in once we see more clarity.
Where do you nibble, Mark? Would that be maybe the AI segment of the market?
Yeah, that's one area. And tech generally speaking, that would be a good area. Some of the names that you see in China are very, very interesting in terms of technology. So this is where we would want to look.
Would you be buying Indian tech for that matter, Mark? Some say that perhaps when you take a look at the recent earnings, the numbers weren't great. Maybe that is a sign that India's tech sector may be weaning in terms of its attractiveness?
Yeah, I think there's been a lot of emphasis on Indian tech, but I think what you have to do is look at India as a whole. In other words, as a consumer market, as I mentioned, consumer stocks look good. Of course, every stock that we look at, we try to find those that are using technology to improve their behavior and improve their performance. And there are many of those. So whether you're looking at the retail, whether you're looking at manufacturing, whether you're looking at telecoms, you have to focus on what kind of technology they're using and how are they using technology to improve their productivity and to improve their earnings growth. And there are many, many of those in India. And of course, many of the new markets in India will be markets that relate to technology.
What's the biggest risk in investing in these tech names, Mark? Because we know that there's a big focus on the Mag 7. We're seeing those stocks fluctuating in a big way, and that will impact the rest of the tech plays in the rest of the world.
Of course, the big risk is competition. More and more companies are piling into AI and improving their AI capabilities. So you have to keep an eye on what companies are going to be overtaking others. So this would be the big risk going forward. But you must remember that some of the bigger names, some of the names that are ahead of the game, will continue to be ahead of the game. And those are the companies that you want to focus on.
We know that you're an emerging markets guru and you love India. I'm just wondering, when you take a look at the macro level, do you see Asian emerging markets outpacing perhaps those, rivals in Europe, for instance?
This is going to happen. As I said, generally speaking, these trade negotiations will end probably in the next 6 months or so. And that time we'll see a lot more clarity. So markets like Korea, Taiwan, Vietnam, Thailand, Malaysia, Singapore, Indonesia will all continue to look very, very interesting with lots of innovation coming in play. So I think at the end of the day, these countries will continue to do well. And if the Chinese come to the table in terms of much better tariff structures, eliminating a lot of the non-tariff barriers, then these countries will look very, very good because their major trading partner, of course, has been China and will continue to be China.
Some of these markets have had a stellar run already. The Kospi, case in point, up 35% year to date. How much more upside, and what could be the catalyst here?
Well, yeah, that's true. Some of these people have begun to realize that bad news doesn't go on forever, and there's a great opportunity again now. But I think that's just the beginning. At the end of the day, it's only after we see what the tariff rates are going to be and what trade with the U.S. is going to look like that we'll get a clearer picture. But yes, a number of these markets have moved up. One of the reasons why is that in a case like Taiwan, for example, everybody knows that the technology sector is going to continue to do very, very well. And it doesn't make any difference what the tariff rates are with the U.S. They will be able to export. And the U.S., of course, depends on Taiwan for a lot of technology. So they're not going to kill the goose that lays the golden egg. So again, I think some of these markets will see recovery.
Mark, even as we talk about the potential of Asia and emerging Asia in particular, we've seen a stellar run for the S&P, still hovering at record highs. It does seem like the story of U.S. exceptionalism is persisting, and traders are still preferring the U.S. market to other parts of the world.
Yeah, I mean, that's the probably the most interesting thing that's happened in the last, well, let's say, roughly 10 years. And that is a lot of, number one, a lot of emerging market stocks have moved to the US market, have listed in New York and NASDAQ, in New York Stock Exchange and NASDAQ. That's number one. Number two, a greater proportion of the earnings of US-based companies are coming from emerging countries. Of course, internationally, they've been trading internationally for a long time, but a greater and greater proportion are coming from emerging market countries because those emerging market countries have been growing at double the rate of the developed countries. The other thing that's happening is that the percent of their supplies have become dependent upon emerging countries. Now, of course, Trump would like to eliminate that supply chain and bring it back to the US, but I don't see that as possible. This will not happen. For example, very unlikely that the US will become a major producer of plush toys. That's probably not going to happen. So a lot of the supply chain, which we see now, will still be in existence. And these countries, particularly in Asia, will continue to do well in trade, not only with the US, but with Europe as well.
Mark, if you take a longer term perspective, in this case, 3 to 5 years, what do you see as the big trends that investors should be looking at and investing into?
I think the number one big trend is a move by more and more countries towards some free market environment. We now see a separation in the world between the US and countries like the US who have a free market environment, Japan, Canada, Mexico to some extent, Europe, etc., and countries like China, India, Russia, that are not in that camp. India, of course, is in the free market camp, and I forgot to mention, India is very important in that regard. So I see a growing bifurcation between these two groups of countries. Now, the degree to which this changes, in other words, the degree to which China becomes a free and open market, will have an incredible impact globally, because China is a big, huge country, second largest economy in the world, according to some economists. But at the end of the day, if they are going to convert from a closed economy, which they are now, to an open economy, this will have an incredible impact globally. So I think that's what we have to look at.
Mark, before we let you go, we know that you're launching your latest fund, but that has yet to happen. Is there any indication at all when we can expect that to happen?
Probably by the end of the year. We've already started. We have some investors, friends and family mainly, but we don't want to have a full-scale launch until we're able to get into some of these markets. As you know, negotiating with each of the countries in which we want to invest takes quite a while. And hopefully by the end of the year, we'll be able to get into these countries and be able to invest. And then we'll be ready to go full scope and really move very quickly.
So November, perhaps?
Yeah, probably November, or maybe celebrate Christmas.